Alrighty, let's get it, man. It's been a little minute. We come. We got a trade recap for today, but this is not from today. This is from last week. Today did not take any trades today. One I was like crashed out long weekend. Uh, Went to the state football game and all that. But other than that, let's get into this video. I was trying to record this last week, but I got so busy because I was trying to get stuff done before my little trip this past weekend. But with that being said, let's get into this trade recap from this is from Tuesday the 24th. So this is kind of like a this is the 5 minute time frame. I just want to go over like a quick little overview of pre-market action Tuesday morning. So boom, this was Tuesday, right? So post market Monday, we price ended up rallying up to here, and then we started seeing a little bearish motion Tuesday. So pre-market, when I logged on the charts, I saw that we had this 15-minute imbalance right here. And y'all probably asking why I know this 15 minute, because it's three candlesticks and this is 5 minutes. So three 5 minute candles is technically one 15-minute candle. So anyways, so we had these low resistance highs right here, but we had these highs right here, these 15-minute highs right here, and that's this also the smaller one right here too. So market open, I see price comes up, and like it doesn't take out these highs, but it does sweep out these two low resistance highs. So after seeing that, and I also saw this 15-minute imbalance as well, and it looked like it was getting filled because there was no candlestick closure above this fair value gap or above this little box right here. Price just kept wicked out. So at that point, I was looking for these three lows to get taken out. So then I just waited for I wanted to see price action like during the macro time. Let's go one more down, 1 minute time frame. Will it let me go back this far? We see. Okay, boom. So we see price after taking out these highs immediately break structure to the downside, and then we get legs up in this imbalance a little bit. On the 1 minute, it doesn't look as clear, which is why I don't recommend staying in one time frame for too long. Like it's always good to switch between the 1 and 5 minute, maybe the 15 minute, just to confirm price action. So I saw that we were kind of moving sideways during the macro, which gave me a better sentiment that okay, bet we're not looking like we're pushing up, where it looks like we're gonna end up taking out these lows. So I saw that we had like a 1 minute SMT with Nasdaq and ES, and by the way, I took this trade on Nasdaq. Let's go to ES. Let me show y'all the damn chop work, bro. Tuesday, boom. Okay, yeah, we had a little 1 minute SMT right here. We created a lower high on ES. Nasdaq, we created a higher high. Wait, this is not Tuesday. Oh man, I'm losing track. Okay, here. Right here, higher high, and then also this Nasdaq was the lagging index in my opinion, because during that macro session, ES was all like, where's Monday? As you can see, during this macro time, ES had already ripped all the way down here, while Nasdaq was still chilling like up here within the imbalance. But it was the same sentiment on both, and it was still bearish. even though like ES didn't really like give me any like good entries that I liked, especially like during the macro. Like price was already all the way down here, closer to this first take profit, and then ended up ripping down the second, and then just kept continuing down. So I didn't really see an entry on the ES, which is why I didn't take a trade on ES. I just use it in Confluence with Nasdaq to help enter my trade. Um, this is Friday. So boom, in the 1 minute here, I was just kind of looking for more confirmation, because the more confirmation, the better. You feel more confident in the trade. So we had this 1 minute imbalance. I saw it got invalidated a little bit, but then like broke structure again. So I had entered off this break of structure after this, into my first position here. Or I was, wait, did I? I'm trying to think. I think. Oh yeah, yeah, yeah. Okay, yeah. So I entered off this first break of structure right here. Boom, entered off there. But then I had my first take profit here, right? So price instantly just starts ripping down. It hits my first take profit, but I didn't get to take partial profits. So then I had, when this first TP has hit, I just moved my stop loss to break even, because like I didn't want price to reverse and then end up losing money off a trade where I could have made partial. So I just instantly just moved my stop loss to break even. Then on the next candle, this candle got stopped out. Then I just kind of waited again. I just waited again for like maybe like another possible entry. So we see price come back into this bearish imbalance a little bit, even though it was invalidated with this move up, and then like respected again. I still kept this range hold, and I saw price come in, wigged out, it closed. It didn't close above, so that was also another sentiment that I used to place this trade. Then I see price come down, and then once it breaks, it finally closes below after this black candle. I entered again my second position. I still kept this as my take profit one. Took profit after hitting this TP, and then my second TP right here. Then my final, where I closed my full position out, was at this line, at these equal lows right here, and shoot, trade with pit within minutes. You know what I'm saying? Beautiful trade right here. Uh, I don't know about like me reaching for anything other than maybe like this, but I don't know. That to me would have been a stretch. I don't like. I didn't want to just. I mean, I could have, but nah. I really wasn't looking to have like four take profits. I think three is really like my maximum that I really go for. I don't really. Oh, I try to do anything more than three take profits, just to limit my risk. So that wraps that up for Tuesday. I didn't take any other trades during the week. I didn't, yeah, cause last week we had some high impact news. We had a lot of federal chairman speaking. We had Jerome on, so I just like stayed away from the market. Just kind of let price do his thing. And we did, as you can see, price definitely rallied up, man, like tough. But then again, I don't like to force my trades. I like to keep it natural. You know what I'm saying? Stick to the confluences. Keep it simple. So let's just go over Friday. I didn't take this trade on Friday. I just kind of like marked this out after after New York session. Oh, my leg's itching. What the heck? So boom, let's go over this real quick. This is on Nasdaq. I'll do Nasdaq, and I'll go over both Nasdaq and ES. I don't think I marked anything out for ES on that Friday. Let me let's go ahead and let's low key do that right now. Just gonna market open, then the macro. Let's see, 9:30. 50. Okay, boom. All right. So let's see. Low key, I think what I'm gonna do is I'm gonna make this. I'm gonna put them kind of side by side so we can. I don't know if that'll confuse anybody. Cause flipping back and forth is kind of a pain, but we'll be all right. Let me just make sure. Damn. Okay, looks like Nasdaq and ES on Friday were opposites. They were definitely not. Sorry guys, I'm trying to split screen this bit, boy. If I can, so it'll be easier for us to like look at it. 1 second. 1 second. 1 second. We're all over the place right now. All right, bet here we go. Make one screen to the right, one to the left. All right. So on our right we have Nasdaq. On the left is ES. So let's go to Friday. I think this might be low key like a little bit more efficient than going back and forth. Just split screen this, and then you know what I'm saying. And you can also kind of see the markers on both sides. So I think that's also pretty cool. Okay. So yeah, looks like ES was looking different than Nasdaq. Good thing I stayed off the market on Friday because I would have been confused. All right. So I kind of already marked out most of my stuff on Nasdaq. Let me just clear the chart on Nasdaq real quick. Let's just do this. Let's kind of mark out ES. So let's walk through this. So first of all, looking at the trend, I'm gonna analyze all this on the 1 minute time. Oh wait, also we have some latency. The video. That's not good. Anyways, we got some. Looks like I'm gonna analyze all these on 1 minute time frame on for both of them, so I'm not like flipping in and out. So looks like we're bullish coming off of like the whole week. You know what I'm saying? Friday pre-market's looking nice. You know what I'm saying? We had a little retracement. Early hours of the morning, we moved sideways, and then price rallied during pre-market. So it looks like we were in a retrace during New York AM session. But damn, bro, this price action's terrible. I'm trying to see if I can mark something out, man. It looks like there's nothing on this chart. Okay, I guess, okay, bam. Okay, we have this 15-minute imbalance right here. With which, as you know, market tends to seek liquidity and imbalance price action. Yeah, this is looking like chop block work, bro. Jeez, man. Jeez. I have all these lines on here too. Okay, bet. So we have okay, look, yeah, we have this 4-hour imbalance here. That price definitely sought out this imbalance not once but twice. It looks like on Thursday as well. Came in to see a little bit of rally up, and then we see another dip into the imbalance. Then again, we have no closes below this box, so price is still looking bullish in my eyes. The 1 hour here, so we have a bunch of like imbalance price action. I see a couple BPRs, but we're not gonna get into any of that because the confluence, like BPRs are all the way up here, and price just looks like this is terrible price action, bro. Like if I came on the market and I saw this, bro, I would probably just log off. I probably wouldn't even try to take a trade in this. Okay, so we have this 4-hour imbalance right here that we marked out. So and price pre-market was rallying up, right? So it looks like we took out these 15-minute highs right here, or we took out this one 15-minute high and this one as well. So we took out these highs right here. Oh, let me change the color back to black. Take out these 15-minute highs. We take out these, and then we also have this 15-minute imbalance within here. Okay. So with knowing that, so we have this, we have our little range that we can trade in, right? We have this from this 15-minute imbalance up to this 4-hour imbalance, and as y'all know, the higher time frames hold more power. So price, like I said before, price wants to seek out imbalances and liquidity. In this case, price was seeking out imbalance. So go down to the 5-minute time frame. So, oh damn, this would have been a oof. I don't know if I would have traded on this. This looks terrible. So, yeah, I don't think I would have caught this trade, bro, because this is 11 o'clock already. Like, nah, bro. But we'll still walk through it anyways. So I keep looking at my phone. I'm getting text messages from my teacher. Okay, so pre-market looks like coming into market open, looks like we're in a retrace. You start seeing price. It's choppy, but this is the downtrend. It looks like we're taking out a lot of this low resistance liquidity on the 1 minute right here. All this gets swept out. This is like right after macro, and then we do after that we see price. We have this order block right here. This is our move down. Yeah, we have our order block right here. It's tiny little order block. It's not big at all. I'm gonna mark it out with the box instead of the. We have our little order block here. I'm gonna change the color just for. Okay, we have the orange box, which is our little our order block. I can't speak today. And then we also create this imbalance here on the 1 minute. We do see price react off of it. We do see bullish reaction out of it. Price comes in, it chops a little bit, bro. But like, if you were to enter off this first candle, right? Let's say like you want to like go long, because generally like we are like I said, we are like in like a mini uptrend. Like this is our retracement right here, and then we sweep our liquidity. We create imbalance, and we see price come into imbalance and looks like it wants to fill it. So which our confluences to go long. So let's say if we entered, dip in, entered off this bigger structure right here, going long. Would have had I would have got stopped out. Yep. I would have kept my I would have had my stop loss like the bottom of this candle. I don't think I would have like reached for all the way down here because the risk to reward is not that good. And like I said, we did sweep out these highs, so those would have been my target highs, to be honest. This would have been my first one, my second one. And if I would take this one, I would have got stopped out because I would have kept my stop loss right here. I would have got stopped out on this wick right here. If I was to take this trade, I would have got stopped out on that wick. I would have just got stopped out. I would have lost money on that one. Because we wicked out. Price come up, move down again. I mean, or unless maybe you re-enter, maybe you stay true to this. You know what I'm saying? You're still feeling it. Boom, you enter off there with your stop loss back. Same trading plan pretty much. You just kind of enter again later to try to make your profits back. This would have been a solid little trade, not bad. But me personally, I don't think I would have taken that only because of all this sideways price action right here just doesn't help. And overall, like that's not even the overall like the overall draw on. What am I trying to say? not liquidity, but the overall move of the day. Because like I said, price wants to seek out imbalances, and these 15 minute highs were just a move up, just to take liquidity out and then move price down to fill in imbalances. And as you can see, bro, like it's going off topic, but after even though prices dip lower, but then you see a fat rally back up, bro. Like price did shit the bit, like it did go even lower, and then came up and rallied back up, bro. And I bet you it probably was seeking out some higher time frame liquidity, most likely 4 hour. Yeah, it did. It came down, took out all these lows right here, all these traders out, took them all out. That went long on this, stopped all of them out, and then rallied up. I know I went on a little tangent right there, but it's pretty much saying how these market moves. Even in consolidation, it still does the same thing. Liquidity imbalance, liquidity imbalance. It's just nonstop. But even though this price action is not like all this right here is not ideal. Like I don't like price action like this makes it hard for me to trade, especially with the strategy I use. It makes it real difficult. But if we were still, let's say like, what I'm saying, let's say like you took this trade, you know what I'm saying, you wanted to take like a PM session trade as well, because I know sometimes I do, if I don't trade during the during AM session, sometimes I want to look for a setup during PM session, which it typically happens pretty much every day, but not all the time. Usually there's like a reversal or a continuation, depending on what price wants to do, bro. In our case, it was a bear run. We after taking out these draws on creating a 15 minute, we see price start to draw downwards, right? So we start seeing bearish movement, and this right here is our order block. This is the move up that caused the liquidity sweep. So our order block is much larger. Oh, sorry. So our order block here is a lot bigger. We have like, I'm just gonna mark out the whole. Yeah, we have a larger order block. So we see price close out of it, and then we see this retrace back into it, and we see price here taking out this liquidity and boom, break a structure instantly. So I guess, oh yeah, you could have. So during the macro, you do have this imbalance right here. Delete this. Oh, here's our order block right here. I'm just gonna mark it in red. So there's an order block. We see price come into the order block. Boom, fair value gap created, and then price comes in, fills in that order, fills in the imbalance. Boom. Here is our breaker structure right here. Could have entered off this. Stops. I usually above that candle. And then since there's so much like so many wicks, I don't usually I like to go on higher time frames and seek out sell side liquidity. Where is it at? Okay, maybe that's might be too far back. Too far. Okay, yeah, boom. TP1. TP2. And then, last but not least, TP3. That right there would have been a better trade to take than that first trade that we planned out on ES. What? for and a way better risk to reward ratio. Even though, bro, what the damn, you would have been in this trade for a minute. Even though, like, when I trade PM session, I kind of just I enter and then I set my TP and stop loss, and I just kind of like try to monitor for my phone. Even though by this time I'm usually out of class anyway, so if I have time to sit on here, I'm just gonna sit. But I didn't have any time to take this trade on Friday. So busy. But no, yeah, here it is. This would have been a much better trade to take than that first trade from off of this imbalance like that. Yeah, I could see the difference in the risk to rewards. And even if I would have got stopped out on this first move on this first play, anyways. Where is it at? Oh, because we had this divot move down. Stop loss at the bottom. Yeah. This is a 1 to 2 risk reward. This was a 1 to 6. Almost 1 to 7. So yeah, this is, you know what I'm saying? This pretty much wraps this up for ES. Let's move over to NASDAQ. NASDAQ. See, NASDAQ was a little different. NASDAQ took out its highs pre-market before ES did. So that for sure would have thrown me in a little loop. So yeah, that definitely negates this trade here. I definitely would not have taken this trade. Like, that's crazy. Because if I seen that Nasdaq had already swept out these highs, and ES didn't, at that point I'm just waiting for ES to. I'm waiting for like ES to, you know what I'm saying, to drive up, sweep out these highs, and then at that point looking for sells. Because Nasdaq's already looking ready. It's ready to dump. It's just waiting on Nasdaq. I mean, what? Nasdaq is waiting to dump off. It's just waiting on the S&P 500 to catch up before dumping off. So here we got, okay, bam. So here, this is during the AM session. Oh yeah, this price action was way better here. The short looks a lot cleaner, but I would have probably almost got stopped out if I had taken this, because this was the time where ES was sweeping out liquidity. So yeah. Let's delete this real quick. Okay, bad. So similar sentiment. Looks like we're in like a after this is rally up. You know what I'm saying? We're in like a little retracement, or as it looks to be a retracement. So we see Nas come down here, come into during the macro, take out some of this liquidity here, and we create imbalance. We create two imbalances that I marked out. So we have this first 1 minute imbalance right here, and the second one right here. So boom. As we're in this macro time, price is pretty stagnant. I mark out these lows right here because I'm thinking price may take out these lows and, you know what I'm saying, come back up, fill in some more of this gap, which it does fill in, but it doesn't sweep out these lows right here. Oh yeah, we even have a little bit of no, I thought we had an S&P divergence. I'm tripping. Yeah, no, I'm tweaking. Never mind. False alarm. Right. Yeah. So see price come into imbalance 1 minute. See price actually go down. So no, like if I entered off this first reaction off this inbound of this fair value gap. Let's see. I think I would have got stopped out low key. And even though our breaker structure is like technically all the way down to here, but I do it based on candle closures when I'm entering. Oh, we have I forgot what they call this pattern. It's like a hammer. It's supposed to be like a bearish signal to give you like a bearish confluence that price is gonna probably continue down. We even have this. So yeah, we see price come down, take out some of these lows, and then fill in some more of this imbalance. But if I had entered off this, boom, with my stops, I would have kept my stops above this one, just to be safe. Damn, bro. Either I like to use candlestick body. Sometimes I'll do it up to the wick, but I just like to play my cards a little, not safe, not risky, but not too safe. Just kind of hit it in the middle. So I would have entered off there. My TP1 being these lows right here, that thing gets hit, and then this low right after. I think we have equal lows right there in 1 minute. We have relative equal lows, so all of this right here over, and then maybe down there, because we have low right here, and then we have these guys, yeah. So I would have that was my third TP for sure, because that did get swept out. So this would have been the move on Nasdaq. Risky play for sure. Risky play, because we like this, because this move back up that's gonna fill its imbalance would have been like having me share my bricks. That would have definitely had me on edge for sure, especially after not hitting this first TP. I low-key would have been a little worried, but price wouldn't have stopped me out though. I would have been real close, like a few cents from stopping me out. Then we see price rally down, hitting all take profits. You know, this trade looks nicer on Nasdaq during the AM session, and then ES gave us a better trade during PM session. So really, I mean, shoot, you really could have taken both trades if you really look at it. But sometimes for me, taking two trades, it's like I don't really like taking two trades like that. Wait, is this a? Oh wait, that's not even a. We don't get a bigger structure till right here, to this candle. Yeah. Okay. Boom. So mark this out. Boom. Yeah. So this would have been the trade on Nasdaq Friday, and this would have been the trade on ES on Friday. A little bit later in the day. Definitely, I don't know. Taking this trade this late on Friday was definitely. I don't like doing that, because sometimes the volume in the market just kind of dies out. Like it pretty much did after 1 p.m. It pretty much just went sideways the rest of the day. But no, yeah, that pretty much wraps up this video. I know this video is pretty long, because we did go over Tuesday's trades and then some possible trades that we could have taken on Friday last week. But with that being said, that wraps up this video. I may or may not trade tomorrow, but if I do, I will post a trade recap on time this time. So I'm gonna catch y'all boys then. Till then, deuces, man.